Now we are going to discuss the comprehensive problem 24. Rajan and Selva are partners sharing profits and losses in the ratio of 3:1. Their balance sheet as on 31st March 2017 is as under. So list of liabilities and assets are given. So note that in the liability side you have general reserve. This is a part to be taken to the capital account. And assets lists out all buildings, furniture, stock, debtors, bills receivable, cash at bank, profit and loss account. Here also make a note of profit and loss account. General reserve normally denotes what? Profit item, and it is to be credited to the capital account, whereas profit and loss in the asset side denotes loss. So that will be taken to the debit part of the capital account. In continuation, on 1st April 2017, they admit Ganeshan as a new partner on the following arrangements. Ganeshan brings rupees 10,000 as capital for 1/5 share of profit. So there is one capital introduced by the new partner. And then stock and furniture is to be reduced by 10%. So stock is given to be, if you see, 20,000. And now that is to be reduced, going to come down, and then furniture also is coming down by another 10%. So from 1000 you have to calculate 10% and just subtract this two. So they are all showing a reducing effect, which is loss on the reduction of the assets. A reserve of 5% on debtors for doubtful debts is to be created. So that means out of the 16,000 we have to create a 5%, that is reserve. This also is another loss item. Whenever there is a decrease in the asset, whichever things leads to a decrease or fall in the asset, they are all nothing but called loss. Now appreciate buildings by 20%. So buildings alone is now increasing by 20%. So on 25,000 we will be calculating 20%, and this will become a profit item. Prepare devaluation account, partners capital account, and the balance sheet of the firm on the admission of such after taking into consideration all those items. Now let me just start working out the solutions. So I have just opened up the revaluation account. So as a first thing, we will start recording the adjustment number 2 and then 3. So this is what we are going to show in the revaluation account. So first of all, I will be showing to stock account. What does the problem says? Stock is reduced by 10%. So what do you do is 20,000 into 10 by 100 comes to how much rupees? 2,000. Similarly, there is another asset whose value has gone down. It is called furniture. So to furniture value, if you see in the assets, it is 1,000 rupees. So from this you have to show 10% on 1,000. Another 10% is nothing but 100. So by 100 the value comes down. And then they have also mentioned, there's a mention of this provision for doubtful debts. So you can see this adjustment 5% on the debtors. What do you write? To provision for doubtful debts. So how do you do this as? Now what is debtors value for this? 16,000. In that 5% you have to calculate. So 16,000 into 5 by 100. So this value, if you see, comes to rupees 800. If you cancel it, and then when you multiply, you will be getting rupees 800. As a third adjustment, there is also appreciation of buildings. So any buildings or assets value goes up, it is going to be a profit. Profits will be credited, losses will be debit. That's what we are doing, the three items. Okay, so buildings, I say it is rupees now 25,000. So 25,000 into 20 by 100. Okay, so on calculation it comes to rupees 5,000. Okay, that's all. Now let us total up the revaluation account. You can see that, okay, the credit side total, which is 5,000, is eventually more. So profit is more than the loss. So what was the difference now? So 2,900. Okay, after you deduct, you will be getting 2,100. Okay, so what is this? Nothing but because the profits exceeds the loss. So profit side is 5,000, loss side is, okay, 2,900. So what do you write is 2 profit on revaluation, okay, will be actually transferred to capital account. Now who are the old partners? Okay, the old partners are, as the problem says, Rajan and Selva, and their ratio will be 3:1. In this ratio only we are going to divide now. Okay, so who are the two partners now? As I told you, they are, okay, so Rajan's share will be in 2,100, it is going to be you can see here 3:1, which is nothing but 3 by 4. 3 by 4. And the next partner is going to be, so Selvan, for him also is going to be 2,100 into 1 by 4. So when you calculate, you will be getting 1,515. Okay, and for the next partner it will be 500. So 1,575 and then 525. This will be the respective values. So let me repeat: 1,575 for Rajan, and Selvan it is 525. So the total of this will be 2,100. Now we have recorded revaluation account. Okay, now I'm just opening up as a second one, bank account. Okay, so here you can see that from the given problem, okay, so there is always to be noted if there is any bank in the asset, and you can find one. Okay, so you can see here that, okay, bank is showing 12,500. That means there is already some balance in the bank, balance of cash. So what do you call that available balance of cash? As opening balance. That means to balance drawn. So the bank amount is now, okay, as shown, it is 12,500. So first I write that entry. Next you can see that new partner Ganesh is bringing in capital. So what do you say to Ganesh's capital account? This is another 10,000. So we have recorded every aspect of bank. Okay, now as a last step, we just total up the either sides. So this will be 22,500. That means the closing balance of bank also will be the same amount, as there is no other value in the credit side. That itself you show us to balance drawdown as 22,500. Hope you got the students. Now let us start working on the capital account, because problem says you have to work out the revaluation account. So as an additional thing, we have also opened bank. Now we are going to see the partners capital account. So for that you should make note of the balance of capital. What is there? So this 30,000, 16,000 you will show. Don't forget to show this general reserve and this value, and what you have got as your revaluation, profit or loss, as in this case profit. So all this we are going to record one by one in our capital account. To start with, I will start with the credit side, because capital accounts will show credit balance, no doubt in that. So to balance drawdown. So as I have been telling you, for the two partners, the first one Rajan and Silva. Okay, so I just took you there. Rajan and Silva. So Rajan's amount is 30,000. Their old capital account is showing that balance. Now what about next thing? Don't forget to show the amount of capital brought in by the new partner, Ganeshan. So what is that? That will be 10,000. So keep the other things and all blank. Revaluation showed as a profit. Profits and all will be appearing in the credit side. So revaluation account. So what will we get? 1,000, 575 and 525. 1,575, 1,525. And then there is one general reserve, isn't it? In the liabilities part. So that 4,000 we will be dividing now. Okay. General reserve account. So 4,000 will be divided in the, so problem says the ratio is actually 3:1, that is 3 by 4 and 1 by 4. Okay, into 3 by 4, 1 by 4. Okay, the value is so simple, it's going to be 3,000 and then 1,000 respectively. So the value is very simple to find out, because it is just 3,000 and 4,000, I mean 1,000. Now to show, what to show in the debit side is the loss that appears in the assets part. Remember, we have this profit and loss. Okay, the 10,000, now we take it to the profit and loss account. Same way, 10,000 is divided in the ratio of 3:1, which is nothing but 3 by 4 and 1 by 4 for the two partners. Okay, so after calculating this value, you will be getting 7,500 for Rajan, 2,500 for Silver. Okay, so I just calculate for you and you get this amount. Now it's time to close the revaluation account. Okay, so we've almost taken every value. Let us now just total up the capital account. The total of credit side is what we are going to now consider. So for Rajan, the total comes to 34,575. So I will be showing this in the other side also. 34,575. So here it comes to 18,000. Sorry, 16 another thing. So I think I just repeatedly. So I just remove this one. Okay. It should be 525. So while writing, I just wrote 1,525. Just notice. So it is 525. So the total comes to 17,525. Ganeshan 10,000. So now I have entered the total. So we will work out the difference now. So difference is called as to balance carried on. So from 34,575 and you deduct 7,500, you will be getting 27,075. I'll just write this 27,075. Similarly for Selvam, 17,575 minus 2,500, you will be getting 15,025, and here it is going to be the same 10,000. So these are the values you will be showing for the respective capital. So let us not forget to also record the opening balance. So we just say like by balance brought down. So here 27,075, 15,025, and then it comes to 10,000. Okay. Now let us start recording the balance sheet of the three partners, Rajan, Selvan and Ganeshan. So first, to start with the liabilities, it is always the, you can see the question now how it appears, same format. So first, capital, we need not again enter the general reserve because it has already gone to the capital. So two things, what are they? Capital followed by creditors, and in assets all these we will be entering, leaving the last item, okay, with adjustments to be shown. So let me just show you one by one. So now liabilities, you will be recording the capital accounts. So first the partner is Rajan. So his, you can just see the balance here and okay. Rajan got a balance of 27,075. For Selvan, it is 15,025. Okay, Ganeshan, it is 10,000 what we brought in. Okay, so now let us total up these three values. You will be getting 52,100. Now let us record the sundry creditors. So the problem shows sundry creditors at 37,500. Okay, now nothing else to show in the liabilities. Let's move on to record the assets now. Okay, so as in the order of the problem, we begin with buildings. You can just refer to the text also. Buildings shows 25,000 and it says there is an appreciation. So plus appreciation of 20%. So we already showed the revaluation. Oh, let me just show you that one. Just 5,000 I'm going to now add it to the existing building value. Okay. So this comes to 30,000. Okay. Now what about furniture? These values and all have decreased now. Okay. So already the furniture was 1,000. So you say less depreciation at 10%, which was 100. We show the debit side of the revaluation and see that one. See, okay, this 100 now I am going to minus. So it comes to 900. And then we had stock, that also actually came down. So stock value was 20,000 minus depreciation at reduction of stock, another 10%. Now it becomes 18,000. Next will be the debtors. Here we have created a provision. So provision for bad and doubtful debts at 5%. So just see the revaluation, you understand it better. It came down to 800. So that one you need to show now. Okay, from, so the debtors value, let me just first write it. It was 16,000 minus 800, thus it becomes 15,200. Okay, and there is also bills receivable, or that you can write directly, which is, okay, the problem says it is 3,000, and then you have cash at bank. So usually in cash at bank we will add what the, okay, new partner has brought in, which is nothing but Ganeshan's capital. Cash at bank value stood at 12,500. Actually you can also show this way. I open one bank account, so directly you can write 22,500, but I am just showing the split separately. That is the difference. Okay, this 10,000. So that brought out what we got, 25, sorry, 22,500. That's it. All the items we have entered. Now it's time to total up the balance sheet. So first it is total up the liabilities, and then we move to the assets. So liabilities you have only two items. So 89,600. Okay, 89,600. So let us have a view of the items now. Okay, so 5 plus 7, 2, 7 plus 9, 16, and then it goes on. So when you add, you get here also 89,600 as your total of balance sheet. So the option is about preparing the bank account. If you want, you may prepare, but now just you should have a idea. That's why I've just prepared and shown. Though in the problem you only ask the other three, but there's no mention of bank, but still I've just shown you just to have an idea. Okay, so there's no compulsion of preparing bank, but if you prepare also, there's nothing wrong. Okay students, you can just have a look at this problem now. So the question, revaluation account. Okay, we got a profit and revaluation, followed by bank account is an option I told you, the capital account, okay, and then the balance sheet of the three partners. Okay, so this is the problem number 24. Hope you followed students. Thank you.